still early on gold. I still think gold has a lot more upside, and I really worry that it's going to outpace Bitcoin this year. And I said that last year, and good news, I was wrong. But the S&P 500 did appreciate 25%. What if we get a year when just, God help us, drops 8 to 10%? That's not factored in anybody's model. And at some point, we'll get that. We haven't had a down year since, I think, since 2011. And, we're overdue for some back and fill. Like I said, it's happening in the rest of the world, particularly happening in China. And how long can the U.S. be the shining star? And
from its role in providing economic stability to its ability to hedge against inflation, gold has proven its worth as a resilient and trusted asset. Bitcoin and gold exhibit similar short-term behavior, responding in nearly the same way to geopolitical events. Gold outperforms Bitcoin in the medium term, with stronger performance in 61.8% of events over 90 days. In this interview, Bloomberg Intelligence's MikeMcGlone shares his insights on Bitcoin, gold, and market trends for 2025. Regarding the market fundamentals, McGlone highlights gold's edge over Bitcoin, citing its stability and limited competition. Even if Bitcoin has rallied more, today's ratio of 35.2 between the cryptocurrency and the precious metal is still below its high of 37 reached in 2021. Moving forward, McGlone predicts continued appreciation for gold, supported by declining equity prices. He foresees lower energy prices due to surplus supplies but highlights gold's resilience. In his analysis, McGlone notes the falling S&P 500 to gold ratio since its 2021 peak, reflecting gold's rising strength against equities. Reflecting on 2024, he points out that gold outperformed the S&P 500, with a 27% increase compared to the stock market's 25% total return. This signals a shift in investor preference toward gold as a reliable alternative during economic uncertainty. Over the past 20 years, gold has risen by nearly 500%, compared to less than 400% for the S&P 500. However, over longer periods, stocks have historically outperformed gold. Gold may have underperformed the S&P 500 over the last decade, but not by much in other currencies. The U.S. stock market has been stronger than many other stock markets of developed countries in recent years. For example, using Japanese yen to buy gold instead of investing in the Japanese stock market would have been a superior investment. Looking at the broader perspective, MikeMcGlone notes a significant power shift from the west to the east, driven by changing global trade dynamics. Now we present the clips of MikeMcGlone's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
So I'm still bullish gold. Number one, and particularly if we have a little bit of reversion upward in U.S. stock market volatility, which is almost a 10-year low, a little bit downward in the prices of equities, which is a direct correlation to Bitcoin. Maybe we'll get a little bit less competition for gold from Bitcoin, but I'm still quite bullish gold. And that's kind of what scares me a little bit. I don't know anybody who isn't. But so I'm still bullish gold. I think it's bad for all commodities, particularly because the U.S. has a pretty significant glut of energy with Canada. I mean, U.S. and Canada together have a supply surplus of about 6 million barrels a day of crude and liquid fuels. To put that in context, in 2008, there was a 10 million barrel a day deficit, and definitely a glut of grains and food and energy and LNG. And if there's a trade war, that glut's just going to grow. But also, he also promised lower energy prices. So I don't see anything but things like crude oil and even natural gas to continue what they normally do in history and go lower. I mean, we create more with less every day. We're still using a lot of natural gas, but less and less petroleum. So those prices should go lower. Grain prices should continue their downward trajectories. Yeah, if they'll get to the break-even cost. And corn that's around just below $4 a bushel, and WTI crude oil that's just below $56 a barrel. But gold, I still continue to see appreciating. And that's most notably when, I didn't say if, we have some normal backup in the U.S. stock market. I mean, it's 2.2 times GDP. That's the most in 100 years. It's versus the rest of the world versus most metrics. It's the highest ever versus the rest of the world. But versus most metrics, most people are using the 97th percentile of expensive. And that's why I think you got to look for alternatives, and still gold. So I watch very closely that S&P 500 divided by gold ratio. It takes about 2.2 ounces of gold per S&P 500. That's been trickling down since the peak around 2.6 in 2021. And I'm afraid it's just going to continue lower, unfortunately. And here's the key thing I'll end with is last year, was the best. It's such an awesome year for the S&P 500 total return of 25%. Well, gold increased 27%. That ain't good for when the rock beats stocks big way. So I overall view as cryptos as the leading indicator of speculation. I do agree with the premise of definable diminishing supply, increasing demand and adoption for Bitcoin. But then there's Ethereum, XRP, BNP, Dogecoin. There's gazillions of other ones. And that's the problem. I look at precious metals and gold. And I see there's only three competitors really to gold, silver, platinum, and palladium. And I've been watching that Bitcoin gold ratio forever. And it's still right about 36 ounces of gold to one Bitcoin is the same as that 2021 peak. Yet stock market started and rolled back over. So I'm still tilting towards gold, particularly if we have a risk-off environment that's a little more deflationary. And right now, here's the problem. The Fed stopped easing. Why they stopped easing? Because there's just too much wealth in the system. It's just silly to expect the stock market to go up that much, 2 times GDP, and have inflation really fall. And that's where we are. We're stuck at the moment. The question is, where do we go next? So I'm painting kind of a bearish picture. I've been early on this, but still early on gold. I still think gold has a lot more upside, and I really worry that it's going to outpace Bitcoin this year. And I said that last year, and good news, I was wrong. But the S&P 500 did appreciate 25%. What if we get a year when just, God help us, drops 8 to 10%? That's not factored in anybody's model. And at some point, we'll get that. We haven't had a down year since 2011. And, we're overdue for some back and fill. Like I said, it's happening in the rest of the world, particularly happening in China. And how long can the U.S. be the shining star and get away from that? So it'll be a good question what happens this year. But we see a lot of indicators going that way. And that is, look at bond yields in the U.S. They just keep creeping higher. That's stealing capital from equities.
In the interview, MikeMcGlone underscores the significance of a potential Trump re-election, predicting a legacy-driven agenda with a loyal team and swift trade reforms, including aggressive tariff measures. Drawing insights from Robert Lighthizer and General McMaster's books, McGlone predicts Trump will aggressively use tariffs, including on Canada, to address the U.S. trade deficit. While other policies like tax cuts may face congressional hurdles, trade actions could be swiftly implemented via executive orders. Trump has threatened a 25% blanket tariff on all Canadian exports when he takes office Monday. The threat is similar to one made towards Mexico, the three parties to the USMCA trade agreement. Trump has also talked about increasing tariffs on Chinese imports by 10%. Canada is ready to consider dollar-to-dollar retaliation or an export tax on Canadian oil and gas if President-elect Donald Trump follows through with his 25% blanket tariff plans. Let's get back to the interview.
Seriously, this is an emboldened human being who's been reelected. Attempted assassination attempt. No one thought he could really make it back, and he did. Do not underestimate this human being. Based on 2 books. One book was No Trade is Free by Robert Lighthizer, his former trade advisor, and General McMaster. Trump, if he gets reelected, he's going to hire and have nothing but zealots on his team, complete devotion, loyalty to him. And that's happening. So the threats, I think, are legitimate. And think of it this way. Now he's at the point of thinking of his legacy. He's got 2 years to the midterm. He's got 4 years. He's already pretty much an old man, and then he's gone. He's history. He's going to be, what's my legacy? Did I make the world different? Did I make it better? Why waste time? Get this over with right away. And that was one of the mistakes he made last time. He trusted the Chinese. They pushed back and treated him very poorly. The U.S. trade imbalance started to improve a little bit. But here's some facts about trade. This is something that really resonated for me, having been in the business for almost 40 years. I remember being on the phones with my clients, some Canadians, in the trading pitch in Chicago, and we all would say there's no such thing as free trade when you're the world's largest demand pull economy. There's no single economy a country can offer you similar reciprocity in trade. And that's finally, the U.S. is finally figuring that out. So our trade surplus, a deficit's about $1 trillion, about that. It's been growing for decades. It's about time we rebalance that. And the only way to really do it is with tariffs, really, because negotiation doesn't work. I mean, I just look at the U.S. trying to negotiate with France. So it's a free trade. Well, France already charges 26% on U.S. wine, and U.S. charges like nothing on there. Well, we got to protect our commodities, but they offer maybe 60 million people what kind of GDP? And yes, they have a European Union, but there's how many? 27 different languages. There's nothing even close. So it's going to fix some of those imbalances in the world. Immediate negotiations, just throw on the tariffs. But that's the key thing about it. He can do that right away with presidential orders. Everything else he's talking about, like regulation and lower taxes, that typically involves acts of Congress. And yes, he does have majorities, but they're very slim. And most people, I think, in Congress now are thinking, okay, what's the post-Trump era? Which will be the next big trade?
Investors often see gold as a safe haven during periods of uncertainty, but all sorts of factors can impact its price. According to Long Forecast, gold is expected to soar to $4,151 by November 2025 and reach $4,042 by the end of the year. How will rising global economic tensions reshape investment strategies and the balance between assets like gold and Bitcoin? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.